Let's discuss how you can change the way you think about money. My name's Chris Naugle, and my job is to help you become your own banker. Now, what was your first thought when I said that word, money? Stop and really think about that, because I know you had a feeling when I said that, money. But that same feeling could come when I say words like mom or love. How about dentist? Or maybe colonoscopy. Some of you have a really good thought about that, and some of you have an awful thought. But what were your thoughts when I said the word money? Well, a couple phrases come to mind. If when I said money, you had a negative feeling, it's probably because your upbringing or your parents when you were growing up didn't have much of it, or often told you not to talk about money, or often didn't want to discuss money, or they talked about it in a negative way. Is that you? Because that's how I grew up, and that's always how I used to think about money. But then when I said the word money, some of you watching this probably had a really good feeling. And that's because while you were growing up, you were surrounded by people, most likely your parents, that always talked positive about money. And they probably had a lot of money as well. So you had a good experience with money. But the point I'm trying to make is that every one of you had a different feeling about those words I mentioned, especially money. And that's because of your upbringings. You learned the things you learned by the people you trusted and the people you were around. And none of you have the same upbringing. You all had different parents. You all had different schools you went to, different neighborhoods you grew up in, different friends you hung out with, different teachers. And every one of them played a part into your thought process. And if you were given the choice, would you change the thoughts and the feelings you had that were associated with that word money? If so, this video is for you. So let's dive into 5 different reasons why people have the feeling they did about money. First thing is the perception of money. I already went into this a little bit, but let's go one step deeper. Your upbringing and the people that you were surrounded by and the people that you trusted led you to believe the things you believe about money. Good, bad, or indifferent, it doesn't matter. And the one most important thing I want to talk to you about the perception of money is it's usually a false reality. It's a false perception. Because money is nothing more than a tool, which is the second thing. If you really just take all the emotion away from the word money and you understand that it is just a tool, it simplifies this whole thing. One of the things that's very important when you're thinking of money as a tool is to understand this. Money doesn't make you happy. Buying things or your material items that you have don't make people happy. It is possible and usually very realistic that people that have a lot of money oftentimes aren't happy. You know what money really is? Money is your ticket, your hall pass to freedom. And if you understand that the tool of money is nothing more than something that creates freedom for you, then that perception changes. Because now we just need to learn how to use that tool. So money is just a result of the value we provide. So think about that. When we talk about things costing too much, you should actually ask yourself, cost is only relevant if there's not value. Because cost is really only an issue when there's no value. Think about that. So money is a result of the value we provide. So what value do you provide and what problem do you solve? So when you're really thinking about the tool of money, everybody's number one thing is, well, how do I make more of it? Well, you solve a problem. That's the simplest way. Every company in the world does one thing really well. They solve a problem. Their problem they're solving. So when you're thinking about money, you're probably thinking about it in a negative way because you have money problems. Those money problems could be you have too much debt. You're living paycheck to paycheck. You hate your job. You don't make enough. Whatever those problems are, they are a result of the value you provide. So if you want more money, provide more value. Solve more problems. Let me bring that down to a whole nother level. And this is where things changed for me. A lot of my upbringing was spent doing jobs when I was a kid that I really didn't like. But I did them just because I wanted money. I needed the money. And I bet you that's the case with many of you. But there was a point in my life where things changed. And that was really when I became an entrepreneur and I started solving other people's problems and creating products or things that helped people be happy or help people solve a problem, whatever that was. The whole thing changed for me when I really understood that I made more money when I solved bigger problems. And I made more money when I solved problems for a larger amount of people. early on, the only problem I was ever trying to solve, because that's what I was taught, was my own problems. My problems every single day were I didn't have enough money. And that might be your problem as well. But that's not going to solve any problem. You're not going to make more money if you only focus on you. You have to focus on what your value is to somebody else. And when you actually solve a problem for somebody else, you get paid to do that. So when you solve a problem for more people, you get paid more money. When you solve bigger problems for people, you get paid bigger amounts of money. Does that make sense? That's all it is. So when you go to work and you bitch and moan that you hate your job, that your boss doesn't pay you enough, and that everything is against you, why do you think you're stuck in the rut you are? Your thought process is wrong. You're not providing any value. You're focused only on you, your problem, and you're blaming. You're playing the blame game. I did this. I know. I remember in some of the times in my life, the earliest that comes to memory is in the early 2000s when the dot-com recession happened. I was in a very tough financial place. I was highly leveraged. And I remember when that happened and everything started falling apart, I blamed everything. I blamed the economy. I blamed the recession. I blamed business partners that did me wrong. I blamed everything. Listen, every day of your life, there's going to be problems. But if all you ever do is blame the problems for where you're at in life, you're doing it backwards. Stop playing the blame game. When you go to work, do you go to work to solve a problem? And I'm not just talking about like you're solving a problem for yourself by making a sale. I mean like, let's take a garbage worker, right? Seems like a pretty crappy job. Somebody that works at a waste facility. Think of that. The dump truck backs up, dumps a bunch of garbage on a conveyor belt. And let's just say you've got a crappy job and you just started and your job is to sift through all that crappy garbage. And the only thing you're supposed to be doing is to sift the usable garbage from the unusable. The glass jars, the cardboard boxes, the milk cartons, they can all be recycled to then create another good and service and save valuable resources on earth. But in doing that and finding that golden nugget, those cardboard boxes, those glass jars, you've got to sift through dirty diapers, banana peels that are rotten, food that's been sitting with maggots on it. Like that seems pretty nasty, doesn't it? So let's do the tale of two garbage workers. And maybe the title's wrong, it doesn't matter. One garbage worker does nothing but complain the whole day. Every time he's got a dirty diaper, he bitches and moans about it. Every time he's going through this, he just is counting the hours until 5 o'clock when he can leave or whatever his schedule is. Every day is the same. Every day is the worst day of his life. The other workers on the other side, he's excited. Every day he comes to work, he understands the problem he's solving is a massive world problem. And that problem is, I need to find more usable resources that I can help this company recycle so that we don't have to chop down more trees, so we don't have to watch our rainforest disappear, so that the valuable resources on this earth don't get depleted because I wasn't willing to provide value by helping recycle things that we can reuse. Think about that. What is the value of that worker? He might be a garbage worker. He might have a crappy job by most people's standards, but he is solving a world problem, a massive problem. The other guy is trying to solve his own problem. He just wants to make money, to pay the bills, and every day is going to be the worst day of his life for the rest of his life. The other person, you know what's going to happen to him? He's going to keep providing value. He's going to keep seeing how much value he does and how big the problem is he's solving. He's not going to be on that line for long. He's going to move up and he's going to climb up. And I bet you any money in a short period of time, if he keeps that positive mindset of solving a problem, he'll be the CEO of that waste company. And what does the CEO of a waste company make? More money probably than you can spend. What was the difference between those two workers? The difference was nothing more than the way they viewed the problem they were solving. One was solving a world problem, the other was only solving their problem. You see, money is never the problem. The problem is how you perceive money. That's the real problem. So let's just do a quick recap of those. The first thing we talked about is why do people have issues with their perception on money? The second thing we talked about, how money is nothing more than a tool. Nothing more, nothing less. The third thing, we talked about the results of money, value. And then we went on to talk about money is never the problem. You and the problem you solve is either the problem or the solution. What is the difference between being successful or failing? There was a study done all about this, and it came down to one solitary thing. thing, and that one thing is creation. Why is it that only 5 out of 100 people are going to be financially successful in this country? If you don't see a problem in that, there's something wrong with you.
What is wrong with you?
Because that means there's going to be a lot of 65, 75, and 85-year-olds working into their retirement, and it is not because they want to. It's because they have to. Today, you gotta create the world you want. I'm Chris Naugle. This is What Now? What's Next? So when you think about the Social Security statistic that says that only 5 out of 100 people are going to be financially successful, and then I tell you that the only reason those 5 are financially successful is because they created something. There's 2 different sides. There's creation and conformity. So let's dissect the 2 of those, and then we're going to go right into this. Creation is you creating the life you want, creating the outcomes you desire, creating a world in the future that you want to live. Conformity is the opposite. Conformity is you following other people's failed dreams, other people's failed realities, other people's failed ideas. Which one do you want? It's easy to decide. You say, I want to create. So why do you conform? Why do you do the opposite of what you want? It's because other people come into your life, usually the people closest to you, friends, family, coworkers, whatever. They're the ones that tell you,
oh, that idea is silly. Oh, that's a scam. Oh, that's not going to work. Oh, you shouldn't do this.
Have you ever really taken one step further? Why do they say it's a scam? Why do they say that won't work? Why do they say you shouldn't? A lot of times, folks, it's because they care. They care about you. And because they care about you, they want to instill in you their fear-driven life. They want to instill in you why they didn't chase their dreams, why they didn't go out there and try to achieve and create. I'm not saying there's something wrong with that. I'm just simply saying that's the world we live in. I know in my life, when I had crazy big ideas, everybody told me they were too big. My family members said,
why can't you just be normal? Why can't you just accept what you have?
Now, when they say that, you're thinking, yeah,
Why don't I just be content? Why don't I just sit back and just be happy? Oh, because we all should just be happy.
But then I think about it and I think, all the people that I've read about in the books and all the videos I've watched about some of the most successful people living, truly living their perfect day. The people doing the most for other people, the people giving the most to other people, the people changing other people's lives. They didn't say that. They didn't say, well, why can't I just be happy? I should just give up on my dreams and just conform to this normal life to appease my wife, my husband, my mom, my dad. They didn't say that. They said, time out. Step aside while I chase my dream, while I do the things that you were unwilling to do, while I go out there and blaze a path that nobody else has blazed, while I go out there and do the things others are unwilling to do. It's hard, folks. It's very difficult to put yourself in that position. And it's difficult when that position happens to you. The one thing I always tell people is you need to decide what you want your future to look like. And if you're not able to do that, then you got a lot of thinking to do. Because it's not just about your life. One of the most important things to understand is the 5th law of wealth. Give generously without conditions. Giving comes in a lot of different shapes and sizes. Giving can only happen if you create something to give. Giving is one of the most powerful things, and giving also involves solving other people's problems. If you just conform, how are you solving anyone's problem? You're just making them feel good. And you call that love, you call that whatever it is. You know what? Haters don't hate you because all you did is conform to what they failed at, what they think life should look like. And you know what? When you peel that onion a few times, usually your haters are the ones that have accomplished nothing. So when it comes down to the topic that I most like to talk about, and that's money, or becoming your own bank, of course it's a topic that a lot of people want to hate on because they don't understand it. But they think they know what they don't know. 73% of Americans say finances and money are their number 1 cause of stress. Number 1. How can we ignore that? How can we just say that there's nothing wrong in the world when it comes to money if 73% of Americans say that money is their number 1 cause of stress? So why is it that our knowledge about money is so broken? It's because the system is broken. It's old. It's been broken for a long time, but it's actually broken just for us. It's right for the institutions, it's right for the banks, and it's definitely right for the powers that be. But who should be right? Who should benefit? You or them? We the people or them? I say we the people need to benefit. But you can't benefit by plugging in and conforming to a failed, broken system. Wall Street, broken. Banking, broken. Let me prove it really quick. When you go to the bank and you deposit money in the bank, does the bank pay you a fair interest rate to hold and use your money? I mean, right now, right? Interest rates are going up. The Fed has vowed to raise interest rates 7 times. The next interest rate hike in 2022, where we're at now, is the 5th, and it might go up 75 basis points or 0.75%. Does that mean that your savings account and your checking account are going to pay you 0.75% more? What? You're probably thinking, Chris, what world are you living in? Of course not. Because when they raise interest rates, everything that you borrow money for gets more expensive. The credit card companies typically increase it, your lines of credit go up, your mortgage rates go up, your car loans go up, but yet your money doesn't earn anything more. What does that tell you? It tells you the system's broken, and it very much is. The banks don't need your money, and they don't need to lend you money. The 50s and 60s, banks operated in a way where when you made your deposits, you got paid a fair or equitable interest rate on your money. The banks then would lend your money out and make the spread. And that's how banks made money. And that's how you think banks make money. But today it doesn't work that way. The banks don't want your money. They don't need your money because the Fed prints the money through the Treasury and then goes to the central banking system and they say,
Hey guys, we got to slow inflation down, so all those loans that you normally would make and all those deposits that you try to entice people to give you, you don't need them anymore. Just give us your money. We'll pay you an interest rate on it. Therefore, we can control everyone.
It's time for you to take back control of your money. And taking back control of your money involves one change. I swear it is that simple. The wealthiest families in history have done one thing different than you're doing now. They've changed where their money goes first because they understood they need to be in control of their money. In the old days and even in today's world, it's called privatized banking, but you probably have never heard about it because the people you get your advice from are working for the man. Why would they want you to go private with your money? They wouldn't, so they won't tell you about it. Privatized banking is not new. It's been used by all the wealthiest families. It's been reserved for the wealthy. If it's the number one place that banks put their tier 1 capital, then why are the banks not saying, hey, let me show you where we put our safe money? That one change that you would make, that's where your money goes. You know where that is? Changing where your money goes so that you're in control, so that your money earns a guaranteed interest rate contractually, so that your money can earn a dividend every single year, so that your money can be in an environment that is tax-free if created properly, so your money can be protected against judgments and creditors should you ever get sued, and so that your money someday when you're no longer here can be leveraged up and can give your beneficiaries, your family or whoever is your beneficiary, a big upside so they can live a better life like the Rockefellers do in their Rockefeller family banking system. You know, all this sounds really good. You know what that place is? This is where I'm going to really slap you in the face. It's a specially designed and engineered whole life insurance policy from a mutually owned company that pays dividends. There, I said it. Now you are thinking, you idiot. Who told you that's a good place to put your money? Because Dave Ramsey and Susie Orman said that's the worst place you can put your money. And I've always heard that's just an overpriced, expensive life insurance plan. You're right. You're absolutely right. Do you think the Rockefellers, the Rothschilds, the JP Morgans of the world, and the banks of the world, do you think they're buying the same whole life that you are buying from your broke-ass brother-in-law? Are you really dumb enough to think that there's only one type of way that you can design and engineer a whole life? Because, hey, you must live in a world where you think that a Ford Focus is one model. You go into the Ford dealership, they've only got one model of the Ford Focus and nothing can change on it. It's slow, it's cheap, and it's boring, right? That's all a Ford Focus is. But then you're home and you're watching YouTube like you are right now, and you see this car going 130 miles an hour sideways around a turn. And you look at the front and it says Ford, and you see on the back it says Focus. And the driver is a guy named Ken Block. And you start to say, wow, that car must have been designed and engineered to do that because the one I saw at the dealership didn't. Did you ever think that a whole life contract could be designed and engineered to do something completely different than what everybody thinks it's designed for? You gotta wake up. You gotta start understanding that it isn't the things that you don't know that get you hurt. It's the things that you think you know that just aren't so. Who are you getting your advice from? Someone that's selling you something? Someone that's trying to benefit from you? Wall Street? At the advisors like I used to be? Do they benefit by giving up 90% of their income so that you have 90% more money? No. But that's what it takes to design and engineer a whole life to do what I'm saying. A 60 to 90% reduction in the commission. That's right. So why haven't you heard about this? Well, you haven't found somebody that understands the fifth law of wealth, and that is you must give generously without conditions. What is the give? The give is 60 to 90% of their income. What is the get? Your client, the person who you are solely supposed to be solving problems for, has 60 to 90% more money to use immediately. Folks, this isn't new. This has been around a long time. The biggest problem is you don't know about it, or you think you know what you don't know about this. And also, if you're going to be the bank, which is everything we're talking about, taking back control, it's not just about where your money goes first, it's about what you do with it next. If you owned your own bank, and would you make deposits in your bank? Of course you would. You wouldn't go down the street and put deposits in their bank, would you? No, you'd put it in your bank. And if you owned your own bank and you needed a car loan, where would you go? What bank would you go to for that car loan? You'd go to your bank, wouldn't you? And you'd borrow money and you'd take a loan from your bank, not somebody else's. And if you took a loan from your bank, would you pay your bank back the same way you pay their bank back? Would you make monthly payments back to your bank for the same amount you would pay their bank? Whether or not it's less or more, it doesn't matter. You would make payments back because you would never steal from your bank, would you? The answer is yes to that. Stop watching this, because nothing in your life will ever change. You will be broke the rest of your life. You will live in financial slavery the rest of your life. I'm sorry to give you that news, but you don't steal from yourself, which means you don't steal from your own bank that you created. And if the answer was yes to all of those, guess what? You have just learned what the wealthiest families in history know. And because you learned that, here's what you get to do. You get to do all the things a bank does. You get to put money in your bank. You get to take money from your bank. You get to earn a spread on your money for the rest of your life, and you don't have to work harder, work longer, or take on any additional risk to do that. All you did was change one thing, and that was where your money went. And then secondarily, you treated your money the same way you treat the bank's money. Your money goes in a circle. Starts in your bank, goes out there to work for you, buying cars, doing investments, buying real estate, lending on real estate, and then whatever that activity, that opportunity earns you, the interest, dividends, or profits you earn from that activity of your money working for you, are you going to take that interest, dividend, or profit and put it in someone else's bank now that you created your own bank? Hell no. You're going to take that money and you're going to take it around the bottom part of the circle, put it right back in your bank where it belongs, where you're fully in control of it, where your money never stops earning uninterrupted compound interest, and you, for the rest of your life, can be in control of your money. I got a question for you. What are you going to do when the economy collapses again? Are you ready for the inevitable? So what I'm going to do today is I'm going to share with you my economic collapse survival plan. I don't know where that came from. I just made it up. And I'm going to show you what you can do today to have the same peace of mind that I do and everybody else on the other side of an economic collapse has. But I'm talking about the people that actually see it as an opportunity. No matter what the economy does, no matter what happens to the markets, I want you to understand that this could be the largest and single greatest opportunity of your lifetime. But we got to go over some things that you got to make sure you get out of your life. The first thing you have to do is you have to delay gratification. Because when there's an economic collapse coming, gratification needs to come later. It feels great to have nice things. And at some point in your life, it'll make sense for you to have them, but not at the expense of paying yourself less than you deserve. You need to understand your value. Don't let others decide your value for you. Delaying gratification is going to be what's going to set you apart when this thing's over. This next thing is very, very important. Going into this part of your survival plan is you need to focus every ounce of what you have to getting rid of your debt. You need to go into this thing with very little debt, or at least good debt. debt that actually pays you. So, you've heard of liabilities and assets, right? What's the difference between a liability and an asset? An asset pays you. So good debt would be maybe a mortgage on a rental property. But you need to go into this with very little debt, or at least just good debt. What you also need to do is you need to learn from history. In history, you don't have to go back very far. What you can do is you can look at the success stories, and there's so many of them. The success stories from 2008. Because when an economic collapse happens, money doesn't vanish. Money doesn't just disappear. It changes hands. It just changes what team it plays on. That's all. And in the worst case scenario is that money moves from one hand, your hand, to someone else's hand. The person that was ready. The person that followed this economic collapse survival plan. And that needs to be you. The other thing you need to understand is that real estate is going to be your friend, but you need to get real estate at the right price. And you need to understand that real estate right now is going to go down in price. So if you start buying real estate now, the value of it is going to go down. The only game to play in real estate today, 2022, is the income game, the rental game. But you also need to understand that your exit plan is going to be out the window. Because when this whole thing lets loose, the price of that real estate that you own will go down. The other thing you're going to have to really get clear on, and the other thing you're going to have to get really good at, is you're going to have to do what everybody else is unwilling to do. You can't follow the herd here. Because what the herd's going to want to do is react. And that's not going to be the right thing to do. The herd will react too late because they've been too busy following in and playing into the FOMO, the temptations that have been around everywhere. Everybody's rushing to put their money into something because they're all worried about the inflation. Inflation is destroying my dollars. My money's losing money every day. So the answer to that is let's go out and buy stuff. Let's go out and put our money into the markets. Let's go out and buy real estate. I'm not saying all of these are bad. But when you do that, you have no dry powder left, which means you have no money left to take advantage of the real opportunity because you blew it. You put it all into assets and you followed the herd. Warren Buffett says it best. He said, when everybody is being greedy right now, be fearful. Sit on the sidelines. Be scared. Watch everybody else and just understand that what they're doing is stupid. But pretty soon, when everybody is fearful because they've lost and everything's falling apart around them, that's when you react. That's when you get greedy. But you can't do that. You can't get greedy if you haven't planned, if you haven't followed this survival plan. So a big part of this survival plan is reserve capital. You got to put money in boring, safe places. I use U.S. Treasury bonds. I use specially designed and engineered whole life for the majority of my money, my dry powder, my money for that opportunity. It just sits there. And luckily with both of those asset classes, I'm being paid. I'm being paid interest and dividends. Well, at least the whole life is paying me dividends and interest for keeping my money there. And that money is safe. Not just safe, guaranteed. I love that word. Guaranteed. Never used to get to say that in Wall Street. It was always risk, and you can't use the word guaranteed. You got to say investment, because investments carry risk, and you can lose all your money, and sign this form saying you can lose all your money. Not anymore. Not for me, folks. I like guarantees. So my reserve capital and all the money that I save every month goes into those two places right now. U.S. Treasury bonds. Well, actually, let's say three places. U.S. Treasury bonds, mostly long-term. Cash. And I know people say cash is trash right now because of inflation. Inflation is a temporary problem, folks. Get over yourself. Inflation, here today, gone tomorrow. And inflation will give way to deflation. That's the opportunity I'm waiting for. I might lose a little bit of buying power with my cash and with my money that just sits there, but what I will make will far trump anything that I give up today. And then those specially designed and engineered whole lives allow me to earn interest and dividends uninterrupted on my money, and I can deploy that money anytime I want. So, boring and safe is not boring, because boring and safe gives me the opportunity to be ready. This is my survival plan. This is exactly what I think you need to be doing. Because if you're putting all your money into assets today, if you're buying into the stock market thinking we're at the low point, you are going to be sorry, because you're not going to get rich quick. Stop thinking that everything is about making money fast. Wealth takes time. You can get rich quick, but then you'll be poor just as quick. You can make a ton of money and then give all that money back. I was just talking to a guy the other day, and this is a very, very successful guy. He made millions of dollars in the stock market. Millions. And he was telling me all, but he's a very wise man. And then he said, we gave most of it back because we got greedy. We gave most of it back. It's fine to make millions of dollars. And you can be all happy and go about that. But you know what? When you give it all back, don't pat yourself on the back. Punch yourself in the face because that was stupid. Greed is the reason that happened. You need to understand that you got to be realistic. Be realistic in your returns. A couple percent is far better than making a huge return that you got to give back later. Making $1 million and giving back 900 of it is not a good business plan. Making $1 million and keeping $1 million, that's awesome. But you know what the problem is? It takes time. So, boring and safe should be a word that you take pride in. Boring and safe should be something that you look in the mirror and you say, I love boring. I love safe. Because you're being realistic and you're following the survival plan. That's what you need to do. Everything's about to go on sale, folks. Real estate on sale. Stocks on sale. Everything on sale. Cars, trucks, sports cars, boats, planes, soon all going on sale. It's going to be the biggest rollback of your lifetime. But you ever walk into Walmart and they got that big rollback sign, but you forgot your wallet? How valuable was that rollback? How valuable was that sale when you forgot to bring the wallet? Not very. You got excited and then you got real sad because you're like, I shoulda, I coulda, I woulda. Those are 3 words you don't ever want to have to say. Because if you say those in a few years, that means you missed this opportunity. That means you didn't follow this survival plan. But I have a feeling that a few of you, just a few, 2, 3, maybe 4 of you are going to follow these instructions and really go out there and crush it and knock it out of the park in this next economic collapse. Breaking news, this just in. Are you sick of having your money lying around not doing anything? Well, we've got the solution for you. PrivateMoneyClub.com. Back to you, Chris. So they say that the apple doesn't fall far from the tree. But in my case, I picked myself up and I decided to root somewhere else. You see, my dad was a good man, a really good man. But I didn't want to follow in his footsteps. So this is a tough video to do. I've never done this, but I'm going to tell you a little bit about my upbringing that I'm not proud of, but I'm not upset by. It's made me who I am because I chose to go my own path. You see, my dad was an alcoholic. He was a great man. He wasn't a mean alcoholic, but an alcoholic's an alcoholic. He wasn't always there, and even when he was there, sometimes he wasn't there. I'm sure some of you know what I'm talking about. My dad taught me a lot of really amazing things. He taught me how to fish. He spent a lot of time fishing. My dad taught me a lot of things. He taught me how to create a beautiful garden. He taught me a lot of very simple, basic things. But my dad was a simple, basic man. He worked at a factory and spent his whole life there, and he retired in his 50s, got his pension, and then realized that the dream, the retirement dream, wasn't what it seemed. You see, when he retired, he thought it was all over. I'm just going to go enjoy myself, which maybe he spent the next year doing it, but then he realized, wow, this pension isn't going to provide enough money to do that. And my dad never really focused too much on saving or planning for his retirement because he grew up in an era where, when you worked for a company for 20 or 30 years, the company took care of you in the form of a pension. But what he didn't factor in was the pension didn't keep up with life. So he ended up having to get a job. He worked in construction and various other jobs, and I watched all this. The biggest difference between success and failure is creation. And you can't create if you conform. You can't create your life, your dreams, your future, if all you do is conform to other people's failed dreams, other people's failed realities, and other people's failed futures. Now, my father might not think he had a failed future, but in my eyes, it wasn't the future that I wanted for myself. It wasn't the life I wanted for myself. It just wasn't what I envisioned that I was put on this earth to do. But it could have been very easy for me to follow in his footsteps. Very easy. My gosh, he just paves the way. Gets me an interview, gets me a job. I spend the next 30 years. I work for a company if they don't lay me off, which he got laid off all the time. And then I collect my pension and I do what my dad did. That wasn't my path. I saw the effects of the alcohol and I learned from his failures. So what I started to do, and this came a little bit later in life. Granted, when I was a pro snowboarder and when I was in high school and even college, like I partied a lot. I probably drank way more than I should have, but you know, I was a kid. You know, we all have to follow, we all have to learn and enjoy and test things. And, I did that. And I look back and, I'm kind of surprised I didn't go down that path because I very easily could have probably just said, all I want to do is just be simple. But I remember these rules that I set up. And I set them up, maybe later in my snowboard career because I realized in the early snowboarding career, we drank a lot, we partied a lot, but I would wake up with hangovers and I would go try to ride a contest and I often wouldn't win. So then I started setting rules for my life. Simple things. Because I wanted a different path. I wanted a path that was different from those that I was surrounded by. And when I say those that I was surrounded by, I mean like the kids, and the friends that I grew up with. My dad, I wanted a different path than him. And what I did is I remember vividly, and I still follow this today. I set a rule. I wasn't going to stop drinking, but I was going to set a rule of 3 beers over a period of 3 hours. We all know the rule, 1 beer an hour, right? So what I did is I said, when I'm out socializing or I'm at a work function or a conference, like I'll have a beer in my hand. But if you watch me carefully, I don't care if it's a beer, an old fashioned, whatever it is, watch me closely. You will never see me have more than 2 drinks, alcoholic drinks, or 3 beers, ever. It's a rule, folks. I've set my life up to follow those rules, which means I'm always in control because I know my limits. Doesn't mean I can't go out and have fun. Doesn't mean I can't be one of them. Doesn't mean I can't, act, not even act, but just go out and enjoy it. But I have big things to do. And waking up with hangovers, losing half a day to sleeping because I had a long, hard night, that isn't part of my plan. That isn't me creating the life I want. That is me conforming to the life that I grew up in and the life that I don't want. Let me give you a story, and this is a really good story. It's a story of 2 brothers, okay? There's 2 brothers, both born into the same family, same father. He was an alcoholic father. When you look at their upbringing, both of them could have landed in the exact same place. They were best buds. They were brothers. They did everything together. But as we forward pace through their lives, we see some differences. We see one brother go a path, start creating his life, start really following his dreams and really going after it. And the other one just took the easy path, the comfortable path, dad's path. Later on in life, that one brother became an alcoholic, became exactly what his father was. He was a mirror image of his dad, an alcoholic that really accomplished not much and often sat there wondering what happened. There's the other brother who wasn't an alcoholic. I don't think he even drank, but he went on to create a successful company that solved big problems. They're both the same family, same father. They both could have landed in the exact same place. What was different about the one that ended up successful versus the one that became the mirror image of his alcoholic father? Choice. Choice. One created the life they wanted. The other conformed to the life they knew. My story of my dad, good, bad, or indifferent. I created the life I wanted. I continue to create that life, and I continue to follow my dreams, no matter how big they are, because I know that if my dreams aren't big enough to scare the shit out of me, I'm not dreaming big enough. Keep pushing the envelope, folks. Once you create, you never stop creating. But the flip side, once you conform, you never stop conforming. I don't know what your situation is, folks, but you need to give this advice to others. You need to go out there and you need to share your story, good, bad, or indifferent. Because not everybody comes from the same square box that you were raised in, and not everybody belongs to stay in that square box. You got to decide. Are you going to create or are you going to conform? Pick a side. When it comes to your money, a lot of people face disappointment. They're disappointed because their money's not growing fast enough. They're disappointed because their investments aren't doing what they want. They're disappointed because they lose money. They're disappointed because it didn't work out the way they wanted. Well, disappointment is an interesting thing. Disappointment a lot of times comes from not being realistic. Let me tell you a story, and then we're going to get into a diagram here that I'm going to explain exactly what I'm talking about. So the story comes from a book that my friend Greg wrote, and it's called 3 Feet from Gold. It's about the gold rush. So there was this really wealthy individual who got the gold bug, went out there, bought all the best equipment, had the best insight, had the ability to pay for where the gold was. So he sets everything up. He's got all the top equipment, and he starts digging right where all of his research said there's gold. And he's digging, and day by day he keeps going. He's optimistic. But every single day, every bit of time that goes by, he starts losing a little bit of that optimism. And every single day, this boy brings a cart along that is selling supplies, simple supplies that you would need to mine for gold or dig for gold. And the boy just sees this man every day. He was very optimistic. I'm going to be wealthy. I'm going to strike gold. And every single day, it's a little less excitement until you get deep into it. He's got a giant hole. He keeps going. He's found very little gold. And the boy comes by one afternoon, and the man is frustrated. He is depressed. He is so mad and upset because he has all the knowledge, all the resources, all the money and the tools and the best stuff. Gold is right here, and he keeps going. The next day, the boy comes up, and the man has had it. The man comes out of the hole that he's digging, and he says, "Boy, give me what you have in your pocket, and you can have all of this equipment. I'm done. I'm going back to doing what I do." So the boy pulled out what little money he had from that day's rations and that day's sales, and he gives it to the man, and the man storms off. This boy has no knowledge of gold, has no experience in digging for gold or anything else. But since this old man that had all the resources said there's gold underneath there, the boy just started digging, and then kept digging and kept digging. And about 3 days into his digging, his shovel hits something hard. And he gets down and he starts pushing the dirt off of it, and there it is, gold. And he keeps digging and digging around it all, and it was the largest gold deposit to date. That man that gave up, who was disappointed, who got frustrated, he was 3 feet from gold. That boy who had no knowledge had time, had patience, and didn't have false or unrealistic expectations. 3 feet below where that man left, there was the largest gold deposit. How much of an opportunity did that man give up? How many opportunities are you giving up because you're being impatient? You want to get rich quick. Nothing seems to get you results fast enough. You start a marketing campaign and you're getting into it and you're not getting any results right out of the hole, so you just stop. Then you try something else and you start doing that and you start pouring your heart into it, optimistic, and it's not getting results, and you quit that. And every single time you jump into the next thing and the next thing. And then this business is garbage, so you jump to another business. And it gets to be like that one Family Guy episode where he's going around, ooh, piece of candy, ooh, piece of candy, ooh, piece of candy. You're just picking up everything that falls in front of you that looks like an opportunity, smells like an opportunity. You just pick it up and you start going into it. Now you're going in 5 different directions, and you're a master at nothing. Wealth is no different, folks. It takes time. Sometimes a lot of time. And a lot of times, many people just can't wait it out. They just can't keep going, keep putting the effort in, keep the optimism going just long enough. But you know what the problem is? Almost every single time they're 3 feet from gold right when they quit. If you were to interview as many multimillionaires and billionaires, and you were to really get down to the true grit of why they became a millionaire, I bet you any money it's because they never quit. Because the only way to fail in life is to quit. There is no other path to failure. Mark my words. And let me just show you this in a drawing that I did. So here would basically be your expectations along with just about everybody else's. In a diagram here, this line here represents results. This line here represents your time. This line here is your expectation. And you notice how your expectation is just a nice, smooth line straight up. When you invest your money, you just want it to just keep going up. Nice, smooth, and steady. You just want it to keep going up. When you start a business, you just want those incomes to just keep going up. You just want everything to go up. This is what you think should happen. But that's not what happens. This line represents what actually happens. Now, many of you are seeing the whole line. And you're like, yeah, exactly. And by seeing the whole line, you would say, well, that's exactly what I'm going to do. That's exactly how I'm going to do it. But what if I just change the diagram? What if I get rid of this? What if this was the line now? This is exactly what happens. How excited would you be here? Probably not very much. How about here? You'd be incredibly disappointed. How about here? Incredibly disappointed. This is called the valley of disappointment. But you know what happens after the valley of disappointment goes? This is when you're 3 feet from gold. When you're disappointed, you're frustrated, you're tired, you've been putting in everything you got for so long, and you just never seem to get where you want to be. This is where it goes next, folks. This is exactly what happens. This is what would have happened to that man if he just went 3 feet further. But unfortunately, he gave up right when he was about to strike gold, and somebody else saw the opportunity and became wealthy. Are you stopping 3 feet from gold? Do you understand this chart? Do you understand how this works? It's very simple. This is what you think should happen. This is what happens, and this is the danger zone called the valley of disappointment. All it takes is grit and the unwavering ability to never give up. Let me transition. Do you see this chart? Do you want to know exactly what this is? This is what we call the infinite banking concept. It is a concept, a process pioneered by the late R. Nelson Nash. And all the infinite banking concept is the process of you taking back the banking functions in your life. If you apply the process, if you apply the infinite banking concept to your life and you learn it, you read books, you watch videos. By the way, I'll give you some of those videos to watch. And you learn this. This is what it looks like. Because there's nothing super exciting in the beginning about how the infinite banking concept works. There's no instant gratification. It's a delayed gratification. But let me just put this to numbers. Let's just say right here, this is like any business you're ever going to do. You put $100 in the early beginning and you have zero. Or let's just say $10. We'll say you put 100 in and you only have $10. Disappointment. Then you put another $100 in and now you've only got $30. Disappointment. You put another $100 in and you're deep into it. You're 3 years in and you only get $80 back. Disappointment. Most people will quit somewhere along that path because that's the valley of disappointment. The infinite banking concept is no different. You put money in, you don't have access to all of the money into that specially designed whole life insurance policy that we do. You put 100 in, it's going to be far more than that. Let's just say it's 80. Okay, you put 100 in, it's 80. You put 100 in, it's 90 year 2. You put 100 in year 3, maybe it's only 105. And I'm just making numbers up. You're not real excited there. That's 3 years of your life, and you still haven't got where you want to be. So you quit. This is what you give up. Because here, the next year, when you put $100 in, you take out 150. Then you put 100 in later, you take out 200. Now I'm just making numbers up. This is not exact numbers. I'm just giving you this as a reference point, as an example. When you see the whole picture, it's very easy to say, oh, I would wait. There's no question I would wait. It'd be like looking at a stock chart. If you look at a whole stock chart and you go back in time and look at the past, you say, oh my God, I'd be a millionaire. Look at, if I just made that trade right here, I'd be a millionaire. but you wouldn't have made that trade because of fear, because of your disappointment, because of this valley of disappointment here. If you got to right here and you got disappointed and you give up, you quit, this is the sacrifice. How much are you willing to sacrifice, and what specifically are you looking to sacrifice? Because are you willing to give your time and your effort and your energy to get something so great later, but the early road, the journey is very difficult? Folks, that's everything in life. That's not just IBC. That's not just digging for gold. That's just not building a business. That's life. Get used to it. Stop trying to get rich quick and start doing it the way that every super successful multimillionaire and billionaire has done it. They put the time in. They were unwavering. They were consistent and persistent. And they never quit. So how many ads have you seen on YouTube promising to make you rich and get rich quick? Why wait? Get rich now. Well, the answer's way too many to count. So here's a little good news, bad news. I can help you get rich, but it's going to come at the cost of time. It's going to take some time to work, because what I teach is legitimate wealth building. Not these quick fixes, not the get rich quick stuff, not the stuff that hurts you long term. I want you to get wealthy, not rich, because rich people are the next poor people. Wealthy people have learned how not to give the money back. So let's start there. If you're ready, let's dive in. The very first thing you need to do in order to build wealth, to get rich the right way so that you're wealthy, not just rich and for show. How many of you have ever seen people out there that look like they're rich? They got the fancy cars, the fancy clothes, the fancy belt buckles. I'm so sick of these belt buckles. The fancy watches. You know what those people are? Flaunting rich. They're pretending to be rich. And then you got the people like the real wealthy billionaires. What do they wear? Well, some of them just roll around in sweats or jeans. And, Steve Jobs wore the same darn thing. Heck, I hate to say it, but I seem to always wear black. It just seems to be the color I choose. I always look the same because I don't have to think about it, because I got bigger things to do. So let's talk about how you can get wealthy, not just look rich. The very first fundamental thing we need to do, you're not going to like. You're definitely not going to like this. You got to do a budget. I'm sorry. I don't care what you think. I don't care how busy you are. Stop. Let's do your budget. They're actually quite simple, folks. It actually is very simple. On one side, you got your income. On the other side, you got your expenses and your debts. Put your expenses at the top monthly, and then underneath that, put your debts. But let's organize those debts. So when you do your budget, we got your income. And God forbid, please tell me you've got more than one income stream. Because if all you got is one income stream, you're one step away from complete financial destruction. Get a second income. I don't care how you do it. Find a way. Because one income in today's world is not enough. So now we're going to come over to the right side of that budget. You got your normal household expenses on the top, okay, the monthly amount. And then right underneath that, you got your debts. Now, here's what I want you to do different with your debts. I want you to organize them from the lowest balance to the highest balance. You got all those credit cards, right? Lowest balance to highest. Next to it, I want you to put the amount owed. And then next to that, your monthly payment. And then if you want, just to kind of show you, to keep you on track, put the interest rate you're paying on those. So now once we've got all those, what we want to do is we want to use the debt snowball. What we want to do is pay off the lowest balance all the way down to the highest balance. Debt is the number one thing that will keep you from being wealthy. Debt will keep you broke. Debt will keep you on the financial hamster wheel. Debt will keep you in financial slavery. So we got to get rid of the debts. And we're going to use velocity to do this. Velocity is a beautiful thing. It's like the easiest way you can make your money actually work at the highest level. So when we pay off one of those low balance debts, what you're going to do is you're going to recapture and recycle the amount you were giving away. Maybe it's $50, maybe it's 20, maybe it's 100, whatever your lowest debt is. The amount you were giving away, when you pay it off, that money doesn't just sit in that black hole of a bank account. That money comes over into a separate account that you set up, I don't care what it is, where that money can then be recaptured and be built up. We always like using a segregated account. So as it builds up over the year, we can redeploy it toward the next debt, and then the next debt, and the next debt. And you can see how much faster this goes because the velocity increases every time you pay off or pay down a debt. Because when you pay off a debt, you get to take the velocity of the money you were giving away and save that in a segregated account to then redeploy it toward the next one. See, we're really just doing a circle. Your money over here that you're going to pay the debt off moves over, pays the debt off. When the debt's paid off, that money that you were giving away comes back and starts building this bucket up again to then redeploy to the next balance and the next balance. This is how you snowball and pay off debts. There's no faster way to get rid of your debts than that. But you got to be diligent and you got to be consistent and persistent in doing this, because if you're not, there's no way this is ever going to work for you. Now, let's move on to the next phase. Once all your debts are gone and you got all this money sitting over in that segregated account, now what we want to do is we want to figure out how to make that money work for you, because your money has to make more money for you. Stop thinking that all life is about is working longer and working harder and trading your hours for your dollars. Folks, I got news for you. Your hours can't be valued. I don't care what you think you're worth an hour, it's not enough because your time is priceless. You can always make more money, but it will always come at the cost of your time, and your time is the most precious resource you have, which is what makes this lesson so important. Your money must work for you. Now, we often teach the infinite banking concept and how to change just one thing, and that's where your money goes first, where now your money can earn a higher interest rate, your money can earn dividends, and your money can earn uninterrupted compound interest. Once you're out of all those debts and you got all this extra money, that money that can't just sit there, because money that is not in motion is money that is losing value every day to inflation. So we want to take that money and we want to invest, or we want to loan that money out so that it's earning a higher interest rate. So the velocity of your money is moving in your favor and your money's working for you. Now, I can't tell any of you what to invest in. I know what I invest in. I know what I do. I'm the bank. I practice the infinite banking concept. My money is always being loaned out. Investing, I don't really do too much of that right now, maybe into real estate, but what I'm doing is lending my money. I'm being the bank, because somebody once told me one of the most important pieces of information I could ever have learned. He said, the ultimate in real estate is being the bank. You've all heard the old statement, own nothing but control everything. This is what they were talking about, or at least the tip of the iceberg of what they were talking about. When you lend, when you're the bank, and you're lending, you control the deal that you're lending on, especially in real estate, because you've got a lien on it. Hopefully it's a first position, because I don't like being second or third or last, because if you're not first, you are last. Good old Talladega Nights. So I lend out in a first secured position. And when I lend, I have security. That security comes in the form of a mortgage or a deed of trust. Okay? Then I get paid interest on my money, just like a bank does. And that money comes back over, creating more opportunity money. And then I just keep deploying that. You need to do the same thing. But you might not want to lend. You might not want to even be the bank. You got to figure out what it is that you know, like, and understand. The best advice I can give you when it comes to investing money is never invest in things that you don't know, like, and understand. The more you know about something, the more you like it, and the more you understand it, the higher the probability of success is for you. Don't take my advice. There are books where they've interviewed hundreds and hundreds of millionaires. And you know what? These wealthy individuals invest their money into things that they're experts in. And you know what? If you're like, well, I don't know what I'm an expert in, figure that out, because that's what you need to do. And never, ever, ever get too greedy with your money. If you're chasing unrealistic returns, if you're going after investments that have really big payouts, chances are your money's not going to be yours anymore. You'll probably lose your money because those returns right from the get-go were unrealistic. So you need to learn how to be realistic with your money, and be realistic, never greedy, because if you get too greedy, again, your money won't be yours anymore. Folks, let's take a step back. Okay, let's recap the things we talked about. You want to be wealthy. You don't want to be rich, because the rich people, a lot of times, they're just all show and no go. You've all seen cars that look fast, but then you step on the accelerator and nothing happens. That's what most rich people are. All show and no go. When you peel the onion, there's nothing behind it. It's a house of cards, and that house of cards collapses. So we got to define wealthy. Wealthy is when you learn how not to give your money back. Now, to be wealthy, the first thing we need, as we said, is step number 1, create a budget. Income, expenses, debts. But we're going to organize the debts from low to high, and we're going to use the velocity of money. If you don't remember that part, go back in the beginning of this video and learn how that works. We're going to recycle and recapture the money you're giving away into a segregated account, and we're going to be consistent and persistent on doing that. Then after we do that, and we no longer have the bad debts, what we're going to then do is we're going to make that money go out and work for us. Our money is going to make more money for us without us having to work harder, longer, or take on more risk. Because remember what I said? Your time cannot be valued. It's priceless. Our money can go out there and work much harder, much longer, and without any of the problems that we face. So make your money work for you. And then never, ever, ever invest in things that you don't know, like, and understand. And the last thing I said was be realistic with the returns. Don't seek unrealistic returns, or your money will flee you. Folks, if you liked this, these are the things you need to apply. Start to think like the wealthy act. Start to think like the wealthy do. I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.